Every trader dreams of catching a big trend, that one magnificent move that changes everything. But here's the truth most traders never understand. Big trends don't shout, they whisper. And those whispers are only heard by those who've learned to silence their own noise. The secret, if there is one, is not in predicting but in recognizing. Recognizing when the market is beginning to lean in one direction with quiet but undeniable strength. Most traders want a complicated system. They chase the next indicator, the newest theory, or the latest hotshots method. But the biggest trends in history have always been visible to the naked eye. You just had to be disciplined enough to see what's actually there, not what you hope is there. You want to learn one simple trick to identify big trends? Here it is. Watch how the market reacts, not what it does. When the market advances and then takes a hit and yet refuses to collapse, that's not noise, that's strength. When a stock declines on bad news, yet fails to make new lows, that's not random. That's accumulation. The market talks through its behavior. The crowd reacts through emotion. And your job as a trader is to see the difference between the two. I've spent a lifetime studying these reactions. The market is like a living organism, with moods, habits, and patterns that repeat endlessly through time. When I was young and foolish, I thought I could outsmart it. I thought my intelligence could give me an edge. But intelligence is not the weapon that wins in the markets. Emotional control is. Big trends are born out of human behavior, not mathematical precision. The public always fights the trend. They always assume that what just happened will continue indefinitely. They buy after the move has already gone too far, and they sell right before the trend resumes. Why? Because the average trader cannot sit still. They think the market is there to entertain them. They mistake movement for opportunity. But the professional knows. Real opportunity comes from waiting, not acting. That's where the trick lies. To identify a big trend, you must first recognize the market's refusal to do the opposite of what it should. When prices stop falling on bad news, it's a signal. When prices stop rising despite good news, it's another. The market tips its hand long before it makes its move. But most people are too busy reacting emotionally to notice. In my early days, I learned this lesson the hard way. I once shorted a stock that had been in a long uptrend. I thought it had gone too far. It looked overextended. Everyone was talking about it. It had to fall soon, I thought. But the market doesn't owe you logic. That stock climbed higher and higher and higher still. Each new high, I told myself. It can't go further. But it did. And when I finally covered, my loss was more than I cared to admit. The stock had simply refused to break down. It didn't matter what I thought or what the news said. The market was sending a message. And I ignored it. That experience cost me money, but it bought me wisdom. The wisdom to understand that big trends don't reverse because you think they should. They reverse when the market tells you so. The simple trick then is observation, disciplined, detached observation. Imagine you're watching the ocean. The tide comes in, then goes out. Most people stare at the waves, trying to guess when the next one will crash. But the skilled observer watches the tide itself. He notices when the waves stop retreating quite as far, when each advance pushes a little higher. That's how you know the tide has turned. The market behaves the same way. Price action is the only truth there is. News, opinions, forecasts, they are just distractions. The market moves first, and the explanations come later. Every big trend begins with a series of small but persistent higher lows in an uptrend or lower highs in a downtrend. You can almost feel it building like pressure under the surface. You can sense that buyers are quietly stepping in or sellers are quietly unloading. It's subtle, but it's there. When I traded in my early years, I had no fancy charts, no moving averages, no technical indicators. I had a ticker tape, and I watched that tape until my eyes hurt. But it taught me something no book could. It taught me to feel the rhythm of the market. I could tell when a stock was being quietly accumulated. The tape would move up a little, drift back down, but not as far, then up again and back down less each time. That rhythm told me someone with size was buying. And when a big operator starts buying, you don't fight it, you ride it. That's the trick. You don't guess where the trend is going. You let the market show you where it wants to go, and then you align yourself with it. You don't need to know why it's happening. You don't need to be first. You just need to recognize when the behavior changes. Discipline is the hardest part. Everyone wants to trade. Few want to wait. But the big money is not in the buying or selling, it's in the waiting. Once you've identified the direction, your only job is to hold until the market tells you the tide has turned again. That's harder than it sounds, because your mind will play tricks on you. There's a voice that whispers, "Take profits now, before they vanish," or "Get in quick, before you miss the move." Those are not your instincts, those are your fears. And the market has a way of punishing fear. The market rewards patience and punishes haste. When you learn to recognize the quiet clues, the failed breakdowns, the shallow pullbacks, the dry volume before a surge, you start to see that big trends reveal themselves slowly, almost reluctantly. The masses only notice when it's obvious, when it's already too late. That's when they rush in, and that's when you prepare to exit. Remember this: the market doesn't reward intelligence, it rewards discipline. You could have all the information in the world, but if you can't control your emotions, you'll lose. On the other hand, if you know how to observe and act with precision, you'll win even with less information. The trick isn't about finding the perfect entry, it's about finding the perfect behavior. Let me tell you another story. During one bull market, I watched a stock rise day after day. It made new highs, then rested. Each time it pulled back, I waited for it to show weakness, but it didn't. Every dip was bought quickly. The pattern repeated itself until it became almost predictable. I finally bought it, not because I felt like it, but because the market itself told me it was strong. Weeks later, the stock doubled. There was no special news, no sudden revelation. The only clue had been the behavior of the market itself. That's all you ever need. Now, when identifying big trends, don't let your ego get involved. Ego is the silent killer of traders. The moment you start saying, "I know," you've already lost. You don't know. None of us do. The best we can do is interpret the evidence. If the market changes its behavior, we change our stance. Simple as that. Every great trend starts the same way: disbelief. The early stages of every bull or bear market are met with ridicule. The public refuses to believe what's happening. They cling to the past. They say, "It's just a correction," or "It's only temporary." And by the time they finally accept it, the move is already halfway done. So, your job as a trader is to see through the fog of public emotion, to step back and ask, what is the market refusing to do? That's your clue. When the market refuses to fall on bad news, that's strength. When it refuses to rally on good news, that's weakness. You must develop a sort of emotional neutrality. To watch price movement the way a doctor watches a heartbeat, without excitement, without fear, just observation. The trend is either up, down, or sideways. You don't argue with it, you don't explain it, you just identify it. Big trends often start in silence. The tape begins to tighten, volatility decreases, the market feels dull, even lifeless. That's when the smart money is moving. When volume starts to pick up again and prices break out of that quiet range, the trend begins. The crowd will join later, but the smart trader is already positioned. Most traders lose because they can't tell the difference between movement and trend. Movement is noise. Trend is direction. The market moves up and down every day, but it trends over weeks and months. You must zoom out. Look at the structure, not the flicker. When you identify that structure, higher highs and higher lows, or the opposite, that's your cue. But even then, never forget, the market owes you nothing. A trend that looks obvious can end abruptly. That's why you never risk everything. You must manage your capital as if it's your lifeline, because it is. Big trends will come and go, but if you run out of capital, you'll never be there to catch them. The simplest trick to identifying big trends is this: find where the market refuses to go. The refusal tells the truth. Watch how it reacts, not what it does. Let the tape guide you. Stay patient. And when you see that quiet, consistent strength or weakness, that's your invitation. If you learn to listen without bias, to wait without boredom, and to act without fear, you'll catch more big moves in your lifetime than most traders ever will. Because the real secret isn't in predicting the next move, it's in mastering yourself. You don't need 100 systems or a dozen screens. You need clarity. You need patience. You need courage to act when the signal is clear and restraint when it's not. So remember this, the market is never wrong. Your opinion is. The market whispers before it roars. Learn to hear the whisper and you'll never chase the noise again.